Institutional Equity Research Report. NASDAQ, GFUZ. General Fusion Group, the world's first publicly traded pure-play fusion company.
Executive Summary. General Fusion Group Ltd, NASDAQ GFUZ, is a Vancouver, Canada-based fusion energy developer that became, by its own account, the world's first publicly listed pure-play fusion company when it completed a business combination with special purpose acquisition company Spring Valley Acquisition Corp. 3, NASDAQ SVACC, and began trading on NASDAQ on July 13, 2026. Founded in 2002 by Dr. Michel Laberge, General Fusion has spent more than 20 years developing a distinctive approach to fusion power called Magnetized Target Fusion, MTF, which mechanically compresses a magnetized plasma using a rotating liquid lithium liner rather than relying purely on large magnets like a tomac or powerful lasers like inertial confinement fusion. In plain terms, fusion is the same physical process that powers the sun, and if it can be harnessed on Earth, it promises enormous amounts of clean electricity with no long-lived radioactive waste and no risk of meltdown. No company or government program anywhere in the world has yet built a fusion power plant that puts more energy onto the grid than it consumes. General Fusion's pitch is that its mechanical compression approach is simpler and cheaper to engineer than rival designs, and that its demonstration machine, Lawson Machine 26, or LM26, is already operating at roughly half the diameter of a future commercial-scale device, a genuinely unusual physical progress for a company at this stage. Because GFUZ became public through a SPAC merger rather than a traditional IPO, and because General Fusion has never generated revenue, the investment profile here is fundamentally different from a typical operating company. The company entered public markets with approximately $150 million in cash, which management says will fund its Lawson program of technical milestones through 2028, on the way to a targeted first commercial MTF power plant producing energy by 2035. As of July 22, 2026, shares trade around $9.19, down from an all-time intraday high of $14.85 set on the July 13th listing day, giving the company a market capitalization of roughly $275 million. Key facts at a glance. Core technology: Magnetized Target Fusion, MTF, mechanical lithium liner compression of magnetized plasma. Flagship demonstration machine, Lawson Machine 26, or LM26, operating at 50% of commercial-scale diameter. Technical milestone ladder: 1 kilovolt, 10 million degrees centigrade, to 10 kilovolt, 100 million degrees centigrade, to Lawson criterion, scientific break-even equivalent. Most recent disclosed progress: approximately 0.72 kilovolt, 8.4 million degrees centigrade, electron temperature, achieved via compressional heating, June 2026, below the 1 kilovolt first milestone. Revenue to date: none, pre-commercial stage company. Pro forma cash, December 31, 2025, $169.6 million. Pro forma accumulated deficit, $444.7 million. Auditors have flagged going concern doubt. This report is intended to give both professional and retail investors a clear-eyed, plain English view of General Fusion's technology, its financial position as a newly public company, and the key risks and catalysts likely to matter over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold GFUZ shares. Section 2. Investment Thesis. The bull case for General Fusion rests on the idea that it is one of only a small handful of fusion companies worldwide with published, peer-reviewed experimental results and a demonstration machine already operating at commercially relevant scale, positioning it as a legitimate contender in a field where the ultimate prize, the first company to put fusion electricity on the grid, could be worth an extraordinary amount given the scale of global electricity demand, particularly from AI data centers. Access to public capital markets via the SPAC listing gives General Fusion a funding avenue that most of its privately held fusion competitors don't have. The bear case is equally direct. General Fusion has never generated a dollar of revenue, has an accumulated deficit of $444.7 million, and its own auditors have raised substantial doubt about its ability to continue as a going concern. The company's most recently disclosed technical result, 0.72 keV of electron temperature, sits below even its first milestone of 1 keV, let alone the far more distant 10 keV and Lawson criterion goals that stand between General Fusion and a commercially viable reactor. No fusion company anywhere in the world, public or private, has yet achieved sustained net energy production at commercial scale, and General Fusion's own target for a first commercial plant is 2035, nearly a decade away, with enormous execution risk between now and then. Thesis in one sentence: General Fusion offers investors direct, publicly traded exposure to a credible, well-funded fusion research program with a genuinely differentiated engineering approach, but it remains, by any conventional financial measure, a pre-revenue science project whose ultimate commercial success is genuinely unresolved.
Section 3. Company Overview. Legal Entity: General Fusion Group Ltd., parent of operating subsidiary General Fusion Inc. Headquarters: Vancouver, Richmond, British Columbia, Canada. Exchange: ticker NASDAQ, GFUZ for common shares and GFUZW for warrants. Year founded: 2002. Founder and Chief Science Officer, Dr. Michel Labert. Chief Executive Officer, Greg Twinney. Listing method: business combination with Spring Valley Acquisition Corporation 3, SPAC. Closed July 10, 2026. Trading began July 13, 2026. Issuer status: foreign private issuer, Canadian company. Reports on Form 20-F/6K rather than 10K/10Q. Notable early backer: Jeff Bezos via Bezos Expeditions among a broader syndicate of energy-focused venture investors. Corporate milestones. Date: January 21, 2026. Business combination agreement signed with Spring Valley Acquisition Corporation 3. June 2026. LM26 achieves compressional plasma heating to approximately 0.72 keV electron temperature, a step toward the 1 keV first milestone. July 10, 2026. Business combination with Spring Valley Acquisition Corporation 3 completed. July 13, 2026. Shares and warrants begin trading on NASDAQ under GFUZ and GFUZW, and company rings the NASDAQ opening bell as the first publicly listed pure-play fusion company. General Fusion has also been recognized externally for its progress. The company was ranked first on Time's 2026 list of the world's top green tech companies, and it describes itself as one of only 4 private companies worldwide to have achieved meaningful peer-reviewed fusion results, backed by 210 patents issued and pending.
General Fusion does not currently have a commercial business model in the conventional sense. It is, at this stage, a research and development organization racing to prove a specific fusion technology works before it can be engineered into a power plant. The company's stated long-term model is to design, build, and eventually sell or license complete fusion power plants to utilities and large energy buyers, generating revenue from electricity sales, plant construction, and ongoing operations and maintenance, broadly similar in structure to how a conventional power plant developer or advanced reactor company like X-Energy or TerraPower intends to eventually monetize its technology, but with fusion physics still meaningfully less mature than fission. In the near term, the company funds its operations entirely through external capital, historically venture capital and strategic investment, and now public equity markets following the SPAC listing, rather than product revenue. Management has described several non-binding collaboration and framework relationships with utilities and energy companies, including Ontario Power Generation, Bruce Power, the Tennessee Valley Authority, Southern Company, Renexia, Eon, Engie, and ASEN, as evidence of end-market interest in eventual MTF power plants. Investors should understand these as exploratory or framework-level relationships intended to build a future customer pipeline, not as signed, binding revenue contracts. How to think about it? General Fusion today is best understood as a capital-intensive physics and engineering program, not an operating power company. Every dollar spent goes toward proving the underlying science and engineering works at increasing scale. The business of selling power plants and electricity does not begin until the company clears a series of extremely difficult technical milestones, the last and hardest of which, the Lawson criterion, has never been achieved by any company at commercial scale, publicly or privately, anywhere in the world. Section 5. Products and Services. Magnetic Target Fusion, MTF. General Fusion's core technology combines elements of two more familiar fusion approaches. Magnetic confinement fusion, used by tokamaks like ITER, uses powerful magnets to hold plasma in place for long periods at lower density. Inertial confinement fusion, used by the U.S. National Ignition Facility, uses lasers to rapidly compress a tiny fuel pellet to extremely high density for a brief instant. MTF sits in between. It uses modest magnetic fields to pre-form and stabilize a plasma, then mechanically compresses that magnetized plasma using a rotating lithium-lithium liner, aiming to reach fusion conditions with less exotic and, the company argues, cheaper and more durable hardware than either pure approach requires. The Lawson Machine 26, LM26. LM26 is General Fusion's flagship demonstration device integrating the company's existing plasma injector, PI3, the 24th generation of a device line that has produced more than 200,000 plasma experiments over 2 decades, with a newly built lithium liner compression system. Notably, LM26 was designed, built, and made operational in under 2 years and operates at roughly 50% of the diameter envisioned for a future commercial-scale plant, meaning the company is testing its physics at a scale much closer to real size than most early-stage fusion demonstration devices, which the company argues reduces the engineering risk of later scale-up. The Milestone Ladder. Milestone. Target. Status as of this report: 1 keV electron temperature, 10 million degrees Celsius. Not yet achieved. Most recent result, approximately 0.72 keV, 8.4 million degrees Celsius, described by the company as meaningful validation of the compression approach. 10 keV electron temperature, 100 million degrees Celsius. Not yet achieved. Lawson criterion, scientific break-even equivalent. Net fusion energy from the plasma. Not yet achieved by General Fusion or any company or program at commercial scale, publicly or privately, anywhere in the world. Beyond LM26, General Fusion's stated long-term product is a complete commercial MTF power plant, designed from the outset to integrate with existing power plant infrastructure, e.g., conventional steam turbines and grid interconnection, a design choice management argues should ease eventual utility adoption relative to fusion approaches that require entirely novel plant architectures. Section 6. Industry Overview. Fusion energy has attracted a surge of private capital over the past several years, driven by the same underlying force behind advanced nuclear fission and enhanced geothermal investment. Surging electricity demand led by AI data centers colliding with a desire for firm, carbon-free power that doesn't depend on weather. Private fusion companies globally have now raised tens of billions of dollars in aggregate, with Commonwealth Fusion Systems alone having raised nearly $3 billion, roughly one-third of all global private fusion investment, to fund its Spark demonstration machine and planned ARC commercial plant in Virginia, targeted for the early 2030s. Despite this capital influx, fusion remains, without exception, a pre-commercial industry. No company, government program, or research consortium anywhere in the world, including multi-decade, multi-billion-dollar efforts like the International ITER project, has yet demonstrated sustained net energy production at a scale suitable for commercial electricity generation. This places fusion in a fundamentally earlier stage of technical maturity than the advanced fission SMR sector, covered in this research series via X-energy, or enhanced geothermal, covered via Fervo Energy, both of which, while also pre-commercial, rely on physics that has been demonstrated at commercial scale for decades. General Fusion's July 2026 NASDAQ listing is itself an industry milestone. It marks the first time public equity market investors have been able to buy direct exposure to a pure-play fusion company, rather than gaining indirect exposure through a diversified energy conglomerate or a venture capital fund. This could be a meaningful structural tailwind for the stock if public market enthusiasm for the fusion theme continues to build. But it also means GFUZ may serve as a bellwether or proxy for fusion sector sentiment more broadly, for better or worse.
Section 7. Market Opportunity. If General Fusion's technology ultimately proves commercially viable, the addressable market is, in principle, the entire global electricity generation market, a market worth trillions of dollars annually, with a growing subset of buyers: hyperscale AI data center operators, heavy industry, and utilities facing surging demand, specifically seeking firm, always-on, carbon-free power. This is the same overarching demand backdrop driving investor interest in advanced nuclear fission, X-energy, and enhanced geothermal, Fervo Energy. General Fusion has cited a number of collaboration and framework relationships as early evidence of this demand, including with Ontario Power Generation and Bruce Power in Canada, the Tennessee Valley Authority and Southern Company in the United States, Renexia, E.ON, and Engie in Europe, and ACEN in Asia. The company's framework agreement with Italian energy company Renexia specifically explores potential commercial MTF deployment in Italy. It is important for investors to understand that, as of this report's date, these relationships are collaborative and exploratory in nature, rather than binding, revenue-generating offtake agreements, a meaningful distinction from, for example, Fervo Energy's 658 megawatts of binding, contracted power purchase agreements with Google. How to think about the opportunity. The market opportunity for fusion, if achieved, is enormous almost by definition, but if achieved is doing a great deal of work in that sentence. Unlike Fervo Energy or X-energy, which are racing to scale a physics platform that has already been proven to work, General Fusion is still racing to prove its core physics platform works at all at commercially relevant conditions.
Section 8. Competitive Landscape. Company, Status, Approach and Positioning. Commonwealth Fusion Systems. Private. Tokamak-based magnetic confinement, high-temperature superconducting magnets, has raised nearly $3 billion, the largest single pool of private fusion capital globally, building Spark demonstration machine and targeting ARC commercial plant in Virginia in the early 2030s. Helion Energy. Private. pulsed, non-ignition fusion approach, backed by Sam Altman, has a widely publicized, though non-binding, milestone-based power purchase agreement with Microsoft, targeting 2028. TE Technologies, private. Field reversed configuration approach using hydrogen-boron fuel, aiming to avoid neutron-producing reactions, one of the longest-running and best-capitalized private fusion companies. Tokamak Energy, Zap Energy, and others, private. Various alternative confinement approaches, spherical tokamaks, sheared flow Z-pinch, at varying stages of technical maturity. ITER, International Government Consortium, large-scale tokamak project in France backed by multiple governments, not commercially oriented, but the largest fusion experiment in the world by physical scale and cumulative investment. Where General Fusion stands. General Fusion's key differentiator is being the only major fusion developer currently accessible to public equity investors, giving it a capital raising avenue most competitors lack. Technically, its MTF approach is genuinely distinct from the tokamak, Commonwealth Fusion, pulsed, Helion, and field-reversed configuration approaches pursued by its best-funded private peers, and the company argues its mechanical compression method requires less exotic engineering than large superconducting magnets or high-repetition rate laser systems. That said, Commonwealth Fusion Systems' nearly $3 billion capital base dwarfs General Fusion's roughly $150 to $170 million of cash, and several private competitors, notably Helion with its Microsoft agreement, have secured more prominent, though non-binding, commercial validation from large technology buyers. Beyond direct fusion competitors, General Fusion also indirectly competes for the same pool of firm power for AI investor and utility attention as advanced fission SMR developers such as X-Energy, Oklo, and NewScale, and enhanced geothermal developers such as Fervo Energy, all pursuing the same underlying customer need with different competing technology bets.
Section 9. Management Team. Greg Twinney, Chief Executive Officer, leads General Fusion's overall strategy and execution, including the company's transition to public markets, has publicly framed the NASDAQ listing as putting the company in a strong position to bring our uniquely practical technology to the world, positioning public capital as a means of accelerating the engineering roadmap rather than an end goal in itself. Has emphasized the company's ability to move quickly on hardware, citing LM26's design-to-operation timeline of under 2 years as evidence of this approach. Dr. Michel Laberge, founder and chief science officer, founded General Fusion in 2002 and has led its scientific and technical direction for more than 2 decades, encompassing the design of 24 successive generations of plasma injectors and over 200,000 plasma experiments. Has described the LM26 program as the culmination of the company's prior technological advancement, stating the team was ready to make some fusion happen upon LM26 achieving first plasma in 2025. Wendy Key, board member, Audit Committee Chair, also serves as board chair of Ontario Power Generation, one of General Fusion's collaboration partners, bringing utility sector governance experience directly relevant to the company's eventual commercialization path. Thomas Bollert, board member, chair of the Nominating and Governance Committee, former CFO of U.S. Strategic Metals, bringing more than 30 decades of experience across industrial, natural resources, agribusiness, power generation, and energy transition sectors. Chris Sorrells, board member, chairman and CEO of Spring Valley Acquisition Corp. 3, the sponsor entity that merged with General Fusion to bring it public. His board seat reflects the sponsor's continuing involvement following the transaction's close. Scientific Advisory. General Fusion's Science and Technology Advisory Committee is chaired by Tony Don, former Chief Executive Officer of Eurofusion, the European Fusion Research Consortium, providing independent technical validation of the company's published results and experimental methodology. Section 10. Financial Performance. Pro forma balance sheet item, December 31, 2025. Amount: cash and cash equivalents, $169.6 million. Current liabilities, $73.1 million. Long-term liabilities, $87.6 million. Redeemable convertible PIPE preferred shares, $106.3 million. 10,556,373 shares. Common share capital, $365.4 million. Accumulated deficit, $444.7 million. Total shareholders' equity, negative $86.0 million. General Fusion has never generated revenue and does not have a multi-year public company financial history since it only became publicly traded on July 13, 2026. The most detailed financial disclosure available as of this report's date is the unaudited pro forma combined balance sheet as of December 31, 2025, filed as part of the SEC registration statement Form F-4-A covering the business combination. In plain terms, General Fusion has spent roughly $445 million cumulatively since its founding developing its technology, with essentially nothing to show for it yet in the form of revenue, which is not unusual for a company attempting a genuine scientific and engineering breakthrough, but does mean the company's balance sheet shows negative shareholders' equity on a pro forma basis, and its auditors have specifically flagged recurring losses and the accumulated deficit as raising substantial doubt about the company's ability to continue as a going concern, absent continued external funding. Share structure. Following the business combination, General Fusion has a dual-class share structure. 52,988,419 subordinate voting shares and 10,556,373 multiple voting shares outstanding, plus 3 series of performance-based earn-out shares that are expected to convert into additional common shares if the stock achieves certain price milestones over time. This structure concentrates voting influence with holders of multiple voting shares, typically pre-merger company insiders, relative to public subordinate voting shareholders.
Section 11. Detailed Analysis. Latest Financial Disclosure. Revenue. $0. General Fusion is pre-commercial and has never recognized product or service revenue in its history as a fusion technology developer. Gross margin, operating income, net income, and EPS. Because the company has no revenue, traditional profitability metrics such as gross margin and operating margin are not meaningful. Third-party data aggregators have reported sharply divergent quarter-to-quarter net income figures around the merger closing, including one quarter showing a net loss exceeding $400 million and an adjacent quarter showing a small net profit. These swings almost certainly reflect non-cash accounting items tied to the SPAC reverse recapitalization transaction, such as changes in the fair value of warrant or earn-out share liabilities, rather than any change in the company's underlying operating cash burn. Investors should treat headline GAAP net income or loss figures from this transition period with caution and focus instead on cash-based operating trends once the company begins publishing standalone post-merger interim results. Precise, standardized quarterly operating loss figures for the period immediately following the merger close. Information not publicly available as of this report's date. Cash flow and balance sheet. As detailed in Section 10, pro forma cash as of December 31, 2025 was $169.6 million against an accumulated deficit of $447.7 million and negative total shareholders' equity of $86.0 million. Management has stated that the approximately $150 million of cash the company holds following the transaction's close, net of transaction expenses, is expected to fund the Lawson program through several key technical milestones targeted for 2028, with a first commercial MTF energy plant targeted to be operating and producing energy by 2035. Guidance. General Fusion has not issued formal quarterly or annual financial guidance in the manner of a revenue-generating company, consistent with its pre-commercial stage. Management's guidance instead centers on technical and programmatic milestones, achieving 1 keV, then 10 keV, then the Lawson criterion on LM26, all targeted to be substantially completed by 2028, with the first commercial MTF energy plant targeted to be operating and producing energy by 2035. Guidance in statement. CEO Greg Twinney has framed the public listing as fuel for continued engineering work rather than a destination in itself, stating the transaction puts the company in a strong position to bring our uniquely practical technology to the world. Following the June 2026 LM26 heating results, Twinney stated, "We are forging a new path in fusion with our uniquely practical MTF approach. The results announced today are all key indicators of real-world progress toward our targeted technical milestones with LM26. Science and Technology Advisory Committee Chair Tony Denay separately characterized the same results as demonstrating behavior consistent with the expected behavior from modeling and simulation, an important form of independent technical validation for a company whose entire investment case rests on unproven physics. Key changes versus previous period. Company became publicly traded for the first time on July 13, 2026, fundamentally changing its capital structure, disclosure obligations, and investor base. LM26 achieved its first disclosed compressional plasma eating result just above 0.72 keV in June 2026, a meaningful technical step, though still below the 1 keV first milestone. Balance sheet transformed via the business combination, adding PIPE financing and trust account proceeds, though the company continues to carry negative shareholders' equity and a going concern qualification on a pro forma basis.
Board of Directors expanded with the addition of utility and industrial sector governance expertise, Wendy Key of Ontario Power Generation, Thomas Bollert, ahead of the listing.
Section 12. Growth Drivers. Continued LM26 technical progress. Successfully reaching the 1 keV and later 10 keV milestones on LM26 would represent major, verifiable de-risking events for the company's core MTF physics, likely to be closely watched by both investors in the broader fusion research community. AI-driven demand for firm, clean power. The same electricity demand surge driving investor interest in advanced fission and enhanced geothermal also supports long-term demand for fusion power if and when the technology becomes commercially viable. First-mover access to public market capitals. As the only publicly traded pure-play fusion company, General Fusion has a capital-raising avenue, follow-on equity offerings, public market visibility, that most competitors, which remain privately held, do not have. Conversion of framework relationships into binding agreements. Progress converting collaboration agreements with utilities such as Ontario Power Generation, Bruce Power, the Tennessee Valley Authority, Southern Company, and Renexia into more concrete commercial commitments would meaningfully strengthen the long-term revenue case. Independent scientific validation. Continued peer-reviewed publication of LM26 results and endorsement from independent bodies such as the company's Science and Technology Advisory Committee would help build credibility with both the scientific community and prospective large industrial or utility customers.
Section 13. Key risks. Number 1. Unproven core technology. No company or government program anywhere in the world has achieved sustained net fusion energy production at commercial scale. General Fusion's own most recent disclosed result, 0.72 keV, sits below its own first milestone, 1 keV, underscoring how much technical distance remains between today and a viable commercial reactor. A going concern doubt.
Auditors have explicitly flagged recurring losses and a $444.7 million accumulated deficit as raising substantial doubt about the company's ability to continue as a going concern, absent continued access to external capital. A no revenue in extended pre-commercial timeline. The company has never generated revenue and does not target a first commercial power plant until 2035, a timeline that, even if achieved, leaves investors with a multi-year or longer wait before any potential commercial cash flow, and which could easily extend further given the historical pattern of delays across large-scale energy in fusion projects. Intense, better-funded competition. Commonwealth Fusion Systems alone has raised nearly $3 billion, roughly 15 to 20 times General Fusion's current cash position, while Helion Energy has secured a prominent, if non-binding, commercial agreement with Microsoft. General Fusion's technical approach differs from these competitors, but there is no guarantee its approach proves superior, faster, or cheaper to commercialize. A limited cash runway relative to the task at hand. Approximately $150 to $170 million of cash is modest relative to the capital typically required to advance fusion technology through increasingly expensive engineering and scale-up phases. The company will likely need to raise substantial additional capital well before reaching commercial operation, which could be dilutive to existing shareholders. Non-binding customer relationships. The utility and energy company relationships cited by General Fusion, Ontario Power Generation, Bruce Power, TVA, Southern Company, Renexia, Eon, Angie, and ASEN are collaborative or exploratory in nature rather than binding offtake contracts, meaning near-term revenue visibility is essentially non-existent. A dual-class share structure and earn-out share dilution. The multiple voting share structure concentrates control with certain insiders, while the 3 series of performance-based earn-out shares represent a further potential source of dilution to public shareholders if the stock achieves specified price milestones. A SPAC-related volatility in limited trading history. With trading having begun only on July 13, 2026, GFUZ has an extremely short public trading history. Shares have already fallen from an intraday all-time high of $14.85 to around $9.19, illustrating the kind of volatility common to newly de-SPACed pre-revenue companies. A reduced disclosure as a foreign private issuer. As a foreign private issuer, General Fusion is subject to different, generally less frequent reporting requirements than a typical U.S. domestic NASDAQ-listed company, meaning investors may have less frequent visibility into operating results than they would with a comparable U.S. company.
Section 14. Valuation. Conventional valuation tools, price to earnings, price to sales, EV to EBITDA, are entirely inapplicable to General Fusion, since the company has no revenue, no earnings, and negative shareholders' equity on a pro forma basis. As with other pre-revenue, pre-commercial energy technology companies covered in this research series, such as X-Energy and Fervo Energy in earlier stages of their own development, the market is effectively pricing GFUZ based on the perceived probability and eventual scale of commercial success, discounted over a very long and uncertain timeline, rather than on any near-term financial metric. Metric. Value. Share price. July 22, 2026. Market capitalization, $9.19. $275 million. Estimate varies by data source and share count basis, roughly $260 to $290 million. All-time high, July 13, 2026, listing day, $14.85. All-time low, pre-listing SPAC trading, July 7, 2026, $7.35. Cash at listing, $150 million. Accumulated deficit, pro forma, December 31, 2025, $444.7 million. One way to frame General Fusion's valuation is that the market is currently paying roughly $275 million for a company with $150 to $170 million of cash and a technology platform still several major unproven technical milestones away from commercial viability, implying the market assigns a modest but non-trivial premium over cash for the underlying technology, patent portfolio, and public market optionality, without yet pricing in significant probability of near-term commercial success. Given the complete absence of revenue or earnings, formal sell-side analyst price targets and consensus ratings remain limited this soon after listing. Information not publicly available for a broad analyst consensus figure as of this report's date.
Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. LM26 reaches 1 KEV milestone. Information not publicly available, targeted before 2028 program completion. The company's very next technical milestone, achieving it would be the clearest near-term validation of the MTF compression approach. First post-merger interim financial update, Form 6K. Information not publicly available, will give investors the first standalone look at operating cash burn and balance sheet trends as a public company. LM26 progress toward 10 KEV and Lawson criterion. Through 2028, program target. The full technical milestone ladder management has committed to substantially completing by 2028. Conversion of framework agreements into binding commercial contracts, ongoing, would provide the first concrete revenue visibility for the company, similar to FERV Energy's binding PPA backlog. Potential additional capital raises, ongoing/as needed. Given the scale of capital typically required for fusion R&D, further equity or partnership-based financing is a reasonably likely event, with potential dilution implications. Broader fusion sector news flow, competitor milestones/funding rounds. Ongoing. As the only publicly traded pure-play fusion stock, GFUZ may see its share price move on competitor news, e.g., Commonwealth Fusion or Helion milestones, even absent company-specific developments.
Section 16. Long-term outlook. General Fusion's long-term outlook is genuinely binary in a way that few public companies are. Either the company's MTF approach successfully clears the 1 KEV, 10 KEV, and Lawson criterion milestones on a timeline consistent with its 2028 program target and 2035 commercial goal, in which case General Fusion could become one of the first companies in history to commercialize fusion power, an outcome with almost unlimited long-term upside given the scale of global electricity demand, or the technology encounters fundamental physics or engineering barriers that prevent commercial viability, in which case the company's value could ultimately be limited to its patent portfolio, residual cash, and any strategic or acquisition interest from larger energy or industrial players. Unlike the advanced fission SMR or enhanced geothermal, where the underlying physics is well established and the primary risk is one of engineering execution and cost, fusion at General Fusion stage still carries genuine scientific risk alongside engineering risk. This makes General Fusion's long-term outlook considerably more uncertain in both directions than earlier stage companies in adjacent firm power for AI categories covered elsewhere in this research series.
Section 17. Bull Case. Bull Case Summary. LM26 successfully reaches its 1 KEV, then 10 KEV, then Lawson criterion milestones roughly on the 2028 program timeline, each result independently validated through peer review and endorsed by the company's Science and Technology Advisory Committee.
General Fusion's mechanical compression approach proves genuinely cheaper and faster to engineer at commercial scale than rival tokamak, pulsed, or field-reversed configuration designs. Framework relationships with Ontario Power Generation, Renexia, and other utility partners convert into binding commercial agreements well ahead of the 2035 commercial target. Continued public market access allows the company to raise the substantial additional capital fusion commercialization requires without excessive dilution, and General Fusion, as the first mover among publicly traded fusion companies, captures outsized investor attention and valuation premium as the broader fusion investment theme matures. In this scenario, GFUZ could see substantial long-term appreciation as the company de-risks from an unproven science project into a credible commercial energy company.
Section 18. Bear Case. Bear Case Summary. LM26 struggles to progress meaningfully beyond its current 0.72 keV result, revealing that the MTF compression approach faces fundamental physics or engineering barriers not fully anticipated by modeling and simulation. The company's roughly $150 to $170 million of cash proves insufficient to reach the next major milestone, forcing dilutive follow-on capital raises well before any commercial validation. Better-funded competitors, particularly Commonwealth Fusion Systems with nearly $3 billion raised, achieve key technical milestones first, reducing General Fusion's relative standing and access to future utility partnerships. The going concern doubt flagged by auditors proves prescient, and the company is forced into a distressed financing, strategic sale, or wind down before reaching commercial viability. And framework relationships with utilities never convert into binding agreements, leaving the company with no path to revenue even if the underlying technology eventually works. In this scenario, GFUZ shares could face severe and sustained downward pressure as public investors reprice the probability of commercial success sharply lower.
Section 19. Final Investment Conclusion. General Fusion's NASDAQ listing is a genuinely notable milestone for the fusion industry. It is, by the company's own credible account, the first time public equity investors anywhere have been able to buy direct exposure to a pure-play fusion developer, backed by 2 decades of published, peer-reviewed experimental progress and a demonstration machine already operating at commercially relevant scale. That track record differentiates General Fusion from many earlier-stage energy technology story stocks, and its Science and Technology Advisory Committee, chaired by a former Eurofusion CEO, provides a credible layer of independent technical oversight. At the same time, investors need to be honest with themselves about what they are actually buying. A company with zero revenue, a $444.7 million accumulated deficit, negative shareholders' equity, an explicit going concern qualification from its auditors, and a most recent technical result of 0.72 keV that sits below its own first published milestone. The distance between where General Fusion stands today and a commercially operating fusion power plant in 2035 is enormous, and every fusion company in history, including far better funded competitors, has so far fallen short of demonstrating commercial-scale net energy production. Bottom line, General Fusion offers a rare, direct way for public market investors to speculate on one of the most consequential potential technological breakthroughs of the century, but it should be sized and understood as a high-risk venture capital-style speculative position within a portfolio, not as a conventional equity investment, given the complete absence of revenue, the going concern language in its own financial disclosures, and the multi-decade history of fusion technology falling short of commercial promises across the entire industry. This report does not constitute a recommendation to buy, sell, or hold GFUZ shares. Readers should review the complete Form F4/A and 20-F filings on SEC EDGAR and consult a qualified financial advisor before making any investment decision.